Good morning, everyone. This is our first try at this. We get a lot of requests to send out information based on presentations I've given where there's a lot of data. As you all know, I'm a data junkie. And so we thought we'd do these little video blogs to deliver little bites of information that might be helpful to all of you, or at least interesting. So today we're going to talk about one of our main data points that we track, and that's demographics. Now, all futurists will tell you that how they project out is really based on demographics within the population. If a country has a pyramid, kind of a real steady pyramid demographic growth, that's a country set up for economic success. They're primed for economic success. If it's inverted, and you've heard the stories about European countries with inverted demographics, it's a disaster waiting to happen, right? There's not enough population growth to support the older populations. In the US, we kind of have this hourglass shape. That's a horrible hourglass. In the US, we have this kind of hourglass shape. So we have 77 million baby boomers today. 4% of baby boomers have achieved 3 million of net worth or more. So let's just call that 3.050 million wealthy individuals. The Gen Xers are a 25% smaller population, 62 million Gen Xers, and only 2% of Gen Xers have achieved 3 million of net worth or more. So that's 1.2 million individuals. So several years ago, we started thinking there should be some pricing compression that futurists would predict in this shift between these generations. Now, interestingly, behind the Gen Xers, 88 million millennials, and then the Gen Y behind that is set to be, or iGen they call it, is set to be the biggest population in US history. So there's a big population growth coming down the road, but from baby boomers to Gen Xers, there's this gap that should create some pricing pressure as baby boomers transition assets to these Gen Xers who don't have the ability to buy them. But it really wasn't showing up in the markets, right? All-time high stock markets, commercial real estate at all-time highs, apartment complexes. But in any market where institutions are not participating as a buyer, we see it show up, like high-end residential housing. So 3 million and up homes are collapsing in price all around the United States, even in retirement areas like in Florida. As baby boomers move into more efficient lifestyles, like condos and those kinds of living situations, these high-end homes are just collapsing because there's not enough Gen Xers to fill the gap. In fact, the population of New York is falling. It has been since 2011. People think it's because of the taxes and the weather. The truth is, it's because of the demographics. In 2011, the oldest of the baby boomers turned 66. If you didn't have to live in New York to achieve your economic objectives, then you wouldn't live in New York because of the weather and the taxes. It's both things combining to cause this migration south, really. The beneficiary of that is really Florida. Out of California, the beneficiary of that is Texas, Nevada, Arizona, and California did start to see a demographics decline starting in 2017. The median age of California is 5 years younger than the median age of New York. So it's very interesting. You can actually track these baby boomer shifts going on right now. In fact, this is such a dominant economic force that 82% of US financial assets are actually controlled by baby boomers. If you want to see any resources that we pulled this data from, just email me. I'm happy to send out all reference sites. Have a great day.